Yeah, well, I mean, we are buying stocks for income, so clearly you want to make sure they're going to pay the income. So we're very focused. It's interesting. I mean, a lot of people are trying to pick the winners. We're actually, to some extent, focused about avoiding the losers. So we basically have a bit of a checklist of like, how strong is their dividend? What is the potential or likelihood they might cut that dividend? Is it going to be a massive cut, etc.? So we look at that sort of, certainly sustainability, and it may be some extent near-term sustainability, because sometimes we go into stocks for the next dividend. We're not necessarily going to be there. We are very active managers. We're not necessarily going to go and be overweight that stock for the next 10 years to get dividends. That, we see a lot of opportunities in moving the portfolio around and rotating. So we're very focused on what the next dividend payment might be. So in terms of that, you're looking at what is, you mentioned before, the payout ratio. Is that payout ratio sustainable? If stocks, this is a giveaway for BHP, if a stock is trading on well over 100% payout ratio based on last year's dividend and the expected earnings this year, then that isn't sustainable. And so we look for those sorts of things. We want reasonable payout levels. Now the banks are trading on pretty high payout ratios, but at 80% is still sustainable. I mean, that means they're investing 20% of their earnings back into the business. So that's quite a reasonable sort of level. We also look for some dead giveaways. I mean, one of the simplest rules I think for investors when you're looking at dividends is how well is the business performing? And if the business is performing well, that's a great news. But if the business is performing very poorly, as BHP was under the hammer for a number of reasons, iron ore prices were falling, oil prices were falling. They're its two biggest sort of revenue earners, and then you had the incident in Samarco, those sorts of things. So you had those. Everything was going against it, so the business was actually underperforming. So it's not surprising that it cut its dividend, given all those negatives on that sort of company. So, we're trying to avoid the losers, but on the other hand, we're trying to pick the guys that have got good business momentum.